Hello and welcome to Crypto Weeklies. In this video, we will be covering AIOZ, conduct machine learning based price forecast, regression analysis, as well as accumulation strategy for AIOZ. None of the content is financial advice. All of the content over here under this umbrella of AIOZ Network available on cryptoweeklies.com, the machine learning based price prediction, regression analysis, accumulation strategies, as well as estimated bull target over here, as well as some of the other analytics that we'll be covering is the peak value, as well as popular narratives and the risk meter and its popularity. We have been covering AIOS or since the last 8 months. You can see all of the content over here on our channel, Crypto Weeklies. This is the YouTube channel. We have been covering, at least made 5 separate videos related to AIOS. So this is again not cherry picking at the top. Have been covering this since forever now. Almost the circulating supply and total supply for this crypto is one and the same. Volume more than 10% of the market cap in terms of price versus market cap analysis. A slight deviation between price and market cap growth, but again not too concerning. Again, in March of, let's say, March 25th of 2024, the price was above $1 at that, and now the price is about 7 cents above this level, whereas the market cap back then was $1.12 billion. Now it's $1.25 billion, so about 130 million more higher market cap, but price has moved by about 7 cents. Again, not too awful in terms of price versus market cap growth, but again we will closely monitor it. In terms of the Fibonacci levels and the technical based, some of the key level technical analysis based, some of the key levels to watch for AIOS. Back in the last bull market, the bull run peak was at around $2.50. This move at above $1 represents a move higher than 0.38 fib level. The next level is the 0.5 Fibonacci fib level is at around $1.30, and the 618 fib level is coming in at around $1.60, and 768 fib level coming in at around $2. So the key levels to watch are $1.30, $1.60, and $2.03. In terms of if this particular crypto has a new all-time high in store, the three key levels to watch in terms of that potential new all-time high is, and these are conservative estimate, is the 1.618 level coming in at around $4.20, the 2.618 fib level coming in at around $6.76, and the $3.618 level fib level coming in at around $9.34. So those are, the first one is the most conservative, $4, around $4.20. The second one at a moderate target at around $6.80. So now we'll lean on our machine learning based price forecasts and conduct what is theoretically possible for AIOS now that we are again in the middle of a bull rally. The directionality based model says that the price moves sideways. The bull case is this yellow line based on our machine learning model trend on the weekly price action for AIOS since about 2021. The bull case predicted by the model is between 95 cents and $3.08 between now and early May of 2025. The bear case is between 22 cents and about 70 cents. So, and week by week values are also available on this table below. The base case is this pink line. Bull cases, we have several bull cases. The first is the non-euphoria, which is 1 standard deviation bull case in yellow. The euphoria case is this orange line between $1.10 and about $9, coming close to this 3.618 fib level extension between at around $9. Again, these columns help us in the tabular format, help us understand what could be a week by week 1 standard deviation ceiling at around 68 percentile and 2 standard deviation ceiling at around 95 percentile. So those are the most likely scenarios at this point in time. Again, none of the content is financial advice, and where we stand at around right now at around how much bull market or the bull run is completed at around 52% of the bull run is completed based on this composite risk analysis of top 100 cryptos by market cap between 0 and 1. That if this is pointing at around 0.52, that means slightly over 50% completion of the bull market. You can see the colors have shifted from the low risk to moderate risk, essentially since the last week of November of 2024. Now in December, if you take a cue of the last market cycle starting January 2021, the risks kind of monumentally rose from 0 to 1. So what is in store potentially, if there is a continuation of the bull rally, we might see even heightened risk levels again. Above 0.6, that's when the risk color codes change between yellow to orange. You can see the last time we spent most of the April of 2021 in this orange territory, and briefly in this red territory as well. So at that point in time, the advancement of the risk levels happened really fast. We haven't seen the high risk territory. This is, again, you can filter it out. The last time we were in this high risk territory was back in the early stages of the bear market of 2022. And the highest risk level, again, that occurred sometime in November 2021. This is between 0.8 and 1 risk. The high risk is between 0.6 and 0.8, so 60% to 80%. Above 80% to 100%, towards 100% completion of bull market. Moderate risk is between 40% and 60% risk. We have spent 2 days in March of 2024 above this 40% or moderate risk level. Again, coming back to the some of the lowest risk from March till November, and now again back above 40% risk. Again, these completion of the bull market is not linear by any stretch of imagination. You can see there are phases when there are, even in the bull market, there are phases when the risk level go from moderate to low, or from the highest risk band to the second lowest or the low risk between 0.2 and 0.4, like we did during the summer of 2021, and then from that level, from the green zone to again back to the red zone. So in those kind of market conditions, the volatility is maximum. In terms of some of the narratives over the last 24 hours, over here you can see bullish sentiment has increased a lot. 86% overall social sentiment is bullish. Most of the narratives are in this green. You can check it out, each of the narrative on this sentiment analyzer. You can find that sentiment analyzer using this. So this is the peak value, just which I showed before, and the sentiment analyzer is this crypto TLDR, which hosts a machine learning based sentiment analysis of the news related to crypto over the last 24 hours. Peak value uses top 100 cryptos and identifies if the market is in a peak or in a valley zone. Valley zones is where DCAing makes the most sense. Peaks is where the DCAing out of the market or halting DCA makes the most sense. Today we'll also spend some time analyzing some of the SMA risk. Now that Bitcoin SMA risk has went slightly higher than 80%. This was the first reading above 80% since the bear market, since the bull market of 2021. 80% is the highest risk level for Bitcoin or Ether. Basically, anytime BTC is above that 80% risk, that becomes like a short-term bubble risk, is amplified at that point in time. And you can see on so this was on November, let's say 22nd, and we can compare that with the price of Bitcoin over here. Let's say use this DCA model and check what was the price of Bitcoin on November. Oh, okay, not this one. Let's use a different model. Let's use the time weighted average price model or for November 22nd. That's when Bitcoin started making its first move to 100k. The daily close was at around 98.9, almost 99k at that point in time. So you see that right now the risks have cooled off a little from the SMA levels, and again Ether is almost several risk percentage point away from Bitcoin's risk. Bitcoin's risk is at around 74%. Ether risk is at around 57%. Again, the key is not to DCA out on the first print of risk levels higher than the orange risk levels. Again, The key is to identify if the risks are going down in a linear fashion. So we are not quite there yet towards the ultimate peak of this bull run per this analysis. In terms of some of the popular narratives over the last 24 hours, this is getting updated as we speak. Bitcoin, altcoins, both are gaining traction. Again, AIOS is one of those altcoins. Other altcoins which are getting traction over here, you can check them out on the narrative word cloud. It's over here. The model is available over here. In terms of the heat map, if the updates to the heat map is getting updated over the last 24 hours, she did run a lot. Over the last 7 days, Algorand and Stoken Algo made a lot of news. Over the last 30 days, XLM has been rallying a lot. Over the last 90 days as well, XLM is rallying a lot. Overall, the crypto of the day, thanks to its 30 days and 90 days performance, XLM is still, which is Stellar's crypto, which is still garnering the most attention in the market. In terms of now going back to AIOS, and again, if you're interested in following this kind of market analytics using machine learning as well as natural language processing models, risk models, you can subscribe. I'll also give this video a like to stay updated. We cover almost all of the cryptos by top 100 cryptos by market cap. Now the regression risk or regression analysis for AIOS points that for the first time since about July of 2024, price is slightly above this polynomial regression based fair value. That doesn't mean that we are at the peak. Usually this peak occurs, you can see, over a longer period of time. The peak occurs almost after the 2 standard deviation residual is applied to the fair value in the bull market. Again, you can see this orange line. Usually that's where the toppy nature for the crypto becomes more and more evident. Right now, the 2 standard deviation residual on the regression function is coming in at around $2.91. So this is again a moving target. That means if today the price were to go to $2.93, that would represent the highest risk. But as you can see, this function has a upward swing at this point in time. That means technically, if the prices were to go up, the regression function and the 2 standard deviation ceiling would also go up. For example, back in April 2024, the 2 standard deviation ceiling was at around 84 cents. Now the 2 standard deviation ceiling is at around $2.91. So that represents about, again, the second level of key interest is the $1.49. That would be the 1 standard deviation ceiling. Back in December, that 1 standard deviation ceiling was at around 15 cents. Now it is at around almost 10x from that level. So another one analysis that would like to conduct is the what if the prices were to have some sort of a correction. That 1 standard deviation floor for AIO, as you can see, since almost 2020, late 2023, this 1 standard deviation floor has maintained a decent amount of support. This green line, that green line is coming in at around 40 cents. So that would be a great level of support. First level of support is this 76 cents, which is the fair value per the regression analysis for AIOS. So in terms of the simple moving average, these are the 3 accumulation models for AIOS. The SMA model and the color coded price with respect to the SMA model points to the risk level at around 65%. Again, if the hypothesis is that whenever the risk level, let's say, are above 70 or 80%, DCAing out of the market at those levels or taking profit at those levels have been useful at this point in time. Again, this is not financial advice. This is how an analysis of how far the price is gone from the 20-week moving average helps identify some of the overvalued phases of the market, and the opposite of this is the some of the undervalued phases. Again, this particular analysis does a great job of identifying the peak. That is, the SMA model identifies peaks better than identifying the bottom. The second is the DCA model for AIOS. You can see over here. This the DCA model identifies bottom as well as identifying the top, but again does a better job of identifying the bottoms. You can see per this model, the risk levels are at around 24% closer to the bottom than towards the peak. And this particular model, again, if the hypothesis is DCAing below the 20% risk level, this model identifies just the same. And last but not the least, the time weighted average price model, flashing some of the highest risk levels at $1.08. Again, this particular model helps identify a zone or a range where DCA below this blue line makes the most sense. Right now the price is below the above the time weighted average price, so that is again pointing to a overvalued phase of the market. Again, in terms of the composite estimated bull run target based on the three models that we discussed, coming at a weighted risk of about 51%, and a bull run peak estimated per this conservative estimate of again not machine learning but risk reward analysis of the crypto AIOS. The estimated bull run peak at around $2 represents a reward of about 2x from the current price. So with this, I would like to conclude the video. Hope you enjoyed this content. If you did, please subscribe. Also give this video a like, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.